Hello, welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, today we have CPI coming up and we can see that there is not much activity or volatility in the market. And this is not new to us. We know it very well that before any major event, market prefers to stay silent. Market prefers to stay in a range, and we can see the same thing here also. And I'm extremely sorry for uploading so late. I had a medical emergency, not in my home, in my neighbor. Okay, so I had to rush there. Okay, took care of some things. They're elderly couple. They are staying alone right now. So okay. So sometimes things take a serious turn. Okay, so it's my duty. Anyways, there is CPI, and after that we have FOMC coming up. So we can expect that today there will be volatility, but markets should not be taking a particular direction. Usually CPI is an event where market prefers to take a direction, or it has the potential to change the direction of the market. But as we have immediately FOMC coming up, so I think that market will go for a pause and market will take a direction after the FOMC only. So we can just expect volatility. So if you are a beginner, new trader, if you don't have much capital, be careful because your stop loss may get hit. Okay, and right now gold is standing at 1986. Yesterday we discussed about the sell below 1993 and hopefully you guys made some profit. Okay, so market made a low of 1970s 1976 here. Okay, and we can say that yes, our support of 1980 worked. So if you took a buy around 1980, hopefully you got the profit you are waiting for, because after that market made a high of 1989. So what are the trading opportunities in front of us right now? So first of all, the trend of the market is still down and we cannot deny it. If you're a day trader, if you're a trader who just prefer to hold his position 1 or 2 days, then yes, the market is still in downturn and you need to respect the present trend. And respecting the present trend of the market, we should be looking for sell positions only. But as we all know, at the time of news, we need to be extra careful, because when news dominate the markets, technicals do not work sometimes. So before news, if you see gold going up, observe the market around 1998. Let me change the color. Yeah, observe the market around 1998, and 1998 1999 seems to be a good resistance, or let's make it round number. 1998 to 2000 is the next resistance where we can expect the market to face some selling pressure, or where we can say the sellers are present. Why? Because you can see more or less market is respecting our FIBO setup here, and here we have FIBO 38.2% retracement level. Moreover, the previous support will also be acting as resistance here. So 1998 to 2000 is a level where we can look for a sell, and above it we have 2005. So these are the two resistances or two levels where we can expect the sellers to be present. And if market behaves according to expectation, we can definitely hit the sell button. For that, you simply need to switch to a lower time frame, like 15 minutes, and just observe the market behavior. If you see market showing price rejection from above, you'll get a confirmation that okay, I need to go with a sell position. So 1998, 2000 and 2005 are the two levels where we can expect the sellers to be active, and if market reverses, we can go for a sell right now. Okay, but after news, okay, after news, try to follow the trend of the market, not go with any levels. Similarly, if you see market going down, or if you see market breaking 1975, then you can also go for a sell below 1975 as well. But keep in mind, you need to be a little careful, because for any breakout or breakdown trades, what do we want? What we need? Volume. Without volume, it is not possible for any market to go for a breakout or breakdown. So if market breaks 1975, or try to wait for a couple of minutes, observe the size of the candle. If you see the market is going down with a big red candle, then only go for a sell position. And at first, target 40 pips. If you see the downside is continuing after 40 pips, then you can go ahead. Otherwise, in this type of market situation where we have a big news coming up, usually market uh, tries to reverse, or sometimes market doesn't behave according to expectation. So At first target 40 pips. If you see sale is continuing, then you can go ahead. But otherwise, we can look for a sell below 1975 as well. So markets behavior around 1976, 1977 will be very, very important. And if you're looking for any support, if you're looking for any buy position, then sadly, my dear friend, I do not have any logical buy position right now in front of us. If I have missed anything, you can also write down in the comment section. I would also love to learn because I am also a student of the market, just like you guys. Because see, in absence of volume, if market comes down to this level, there is a possibility that market may bounce a little. So as a scalper, you can look for 25 to 30 pips also. So market's behavior will be very, very important, and obviously volume will play a dominant role here. Do we have any support here? Then, as I have already shown you guys in my previous videos also, the next support on the chart of gold is around 1940 to 1935. This is the next support on the chart of gold, but this support is far away. Okay, this support is far away. Before that, we have some sort of support around 1950. Why 1950? Because 1950 is a round number, it's a psychological support. So not a complete trend reversal, but at least we can expect a minor bounce. But to be honest, I'm not sure. Personally, I'll be looking for a quick buy around 1940, 1938 only. And if you look at the options data, my dear friends, you can see that we do not have any good number of contracts. At 1950, we have an open interest of 3000, but we can also see the change in open interest is not positive. So yes, the market is also believing that further downside is possible on the chart of gold. And if we compare, okay, if we compare to the buyers, position of buyers look to be positive. So more or less we can, market is also expecting further downside. So let's wait and watch. And if you are a swing trader, then obviously you need to wait till FOMC, because after FOMC there may be a change in the direction also. At least you'll get a proper clarity about the next direction about the market. Because for day traders, okay, the direction of the market is not very significant. Okay, the overall direction of the market is not very significant, because flexibility is very important for day trader. Today we are buying, maybe tomorrow we will sell. Okay, so for day traders we have the flexibility, but as a swing trader or if you're a position trader, you don't have the flexibility. You cannot trade both the sides. Okay, so as a result, you need to wait for the market to give you a proper direction, clarity about the market. Okay. So let's wait and watch, and be careful at the time of news, and there's a high chance that market will be silent. If you don't get any proper opportunity, do not lose your patience and gamble with your capital and hard-earned money. We are traders, not gamblers. Don't forget that. Bye bye. Take care.